Good morning, everyone. I know there's still a few people joining, but while we are waiting on a few more participants, I'm going to go ahead and give you guys the 10,000 foot overview of Orion so that the people still trickling in won't miss anything too important. A little bit about me. I am an account executive here at Orion. I am going to be your host today. And I've been an AE since 2004. I really try to focus on broker education. And if you guys want, you can point your camera phone at this QR code here on your screen, and it will take you to my YouTube channel where I try to post some educational, helpful videos as well. Fun fact, I was raised on a cattle farm in Georgia, and I do foster animals. And a matter of fact, if I get an Amazon package or something today, we will have a guest speaker, one of my dogs that I have here now. As I mentioned, we're going to go really quickly the first 5 minutes of the call through some fun features that Orion offers, and then we're going to get into what I know you guys wanted to see, which is our in-house down payment assistance and our DSCR, no income doc investor. If you're not signed up with us, I will give you the quick instructions on how to partner with Orion at the end of the call as well. Orion was literally designed and founded around the broker experience. So we're constantly doing broker roundtable meetings, listening to loan officers and brokers like yourself, finding out what you guys like about Orion, what some of the suggestions you guys have, and we're constantly changing based around that feedback. I'm lucky enough to do a little bit of a business with Orion. So I have my own inside team that is fully committed and designated to my pipeline. So that, of course, helps you guys out as loan officers. They're easy to reach. And we do not hide our underwriters from you. So at the top of all of our approvals, you will see the underwriter's name, email address, phone number, and all of our underwriters are seasoned. They've been doing this a long time as well. We have employees in every time zone at Orion. So I have brokers all the way from Hawaii, all the way over to the East Coast, and Orion has employees all the way from Hawaii to the East Coast. So we try to have support groups in every time zone to service our brokers. One of my favorite contacts that we have, if you want to jot this down, is our scenarios desk, and that's scenarios at orionlending.com. It's answered by underwriters. They tend to answer within just a couple of business hours, and they will even help you calculate self-employed income. We do want you to give it a shot. So if you have self-employed income that you need help with, go ahead and send us the income docs and your calculation, and we'll check it for you and send it back. We do keep track of those. So make sure that if you're sending us a lot of self-employed income to calculate, that you are actually submitting those files to Orion as well. But we're here to help. So anything guideline related, income related, send it to the scenarios desk and you'll hear back pretty quickly. One thing that Orion is very, very proud of is our technology. And rumor has it, we spent about $6 million on our portal a couple of years ago, and it definitely shows. There's all kinds of fun stuff in there for you. We're constantly doing trainings as well. But one of my favorite things about our portal, that is going to be your favorite thing as a loan officer too, is if you upload something, it is actually there. So I know I hear a common theme with other lenders that you uploaded a condition and the underwriter doesn't see it, can't find it. That does not happen with our portal. And that happens to be my favorite thing about our portal that's not even listed as a bullet point here. But other than that, we have a strike price feature. So if you're floating a loan and you haven't locked it yet, you can actually enter where you want pricing to be. So for example, you're looking for 3% paying back at least 2 points. You can enter that into our system. And instead of you logging in every day to see if pricing's where you need it to be, it will actually just send you a text or an email, whichever you choose, as soon as we release a rate sheet that meets that criteria. And it's automated. It's an awesome feature. We also have an integrated fees solution. So what that means is when you're doing the fees in our portal, getting ready to send your disclosures out in our portal, it will actually pull in the title fees for you live, and it's not inflating them or bumping them up, over disclosing them. When you select the title company that you're going to use at the closing, it pulls all of their actual real fees in. And we do guarantee those fees are correct, or we will cure them on the final CD. Also, we keep our CD conditions, the ones that we need before we can issue a CD, right at the top of your approval. And we don't even need the appraisal back on a purchase before we can send the CD out, which is pretty cool. We like to get our CDs out very early. You can also attach your documentation to specific conditions, which I actually like, and add notes to conditions when you upload them. And what that does is it creates a cover page for the underwriter. It doesn't go into outer space or anything. They actually will see that note when they're reviewing the condition. Of course, we have an easy to use quick pricer. Our quick pricer and our portal, when you're pricing loans, will do the QM test for you. It'll actually prevent a QM fail before it starts too. So if you have seller contributions on a file, it will apply those to a QM fail before you ever get a fail, which is pretty cool. And if, like I mentioned, you can set up text message notifications. I love our disclosure tracking screen. So all of our disclosures that we send out, the initial disclosures, LEs, CDs, they're all there. And it quickly and easily tells you if the borrower has signed them and viewed them as well. And I see a question in the chat, is this going to be recorded and available after? Yes. So we are going to move very quickly. And so if you guys take a call or something and you miss something, I am going to, there is a recording available after the presentation. If you want a copy, just shoot me an email and I'll be happy to send you a link. Another cool feature we added a couple of months ago into our portal is our dual AUS. And what that means is that you do have the option of running DU and LP and comparing the results side by side. And why that's cool is you can see, okay, this LP is giving me an appraisal waiver, DU is not, or I like this income doc better than this income documentation requirement. And it kind of can help you choose which route you want to go. Also with appraisals, we have over 15 AMC options. You don't have to sign up with them. We're signed up with them. And some of them will even create appraiser panels for you. So if you've got a couple of appraisers that you know do a good job in your area and want to set up a panel so that the orders go to them first, then let me know. I can coach you through that and let you know how to set those up. You can order the appraisals in our portal. They're going to automatically task over to the underwriter as soon as they come back, even if no other conditions are uploaded. We order the revisions and corrections for you. If you ever have a borrower who's not comfortable giving you their payment information, you can defer payment when you order the appraisal, then send them a link and the customer can process the payment portion on their side. This is probably my favorite part about our portal. So if you're one of those people that says, I know I should be doing marketing, I know I need to post on social media, I know I need to send real estate agents flyers, but I don't have time, or don't have the software to do it. Well, we've done it for you. So when you're in our portal, you're going to click on Marketing Studio at the top right. And this is an actual screenshot that you'll see once you log in. We have hundreds of materials already designed for you, and you can filter by, for example, you can click on DPA and that will filter by the DPA programs that we have. They're already fully, they're ready to go. So it's going to pull in your logo, your photo if you want, your contact information. And this is not branded with Orion. So this is really and truly for you to market yourself and grow your business. We have tons of social media posts. These are some examples that you see on the screen here. It's all fully customizable. So you can change out the photos. There's over 1 million copyright-free images to choose from in there. You can change the font, change the colors, change what it actually says. And everything's in English or Spanish as well. A lot of my brokers like to make the listing flyers for the real estate agents for brownie points. So that's definitely, you can co-brand with your real estate agents, put your info on one side, their info on the other. You can send them out directly from the portal as well if you want. If you want to see more about our portal and marketing studio, if you scan the QR code on your screen, you can schedule an overview. They do these every Tuesday and Thursday, and they will take you through a sample submission, give you a tour of our marketing studio, and I highly recommend it. Or like a lot of people prefer, this is actually my preference too. You can just fumble through the system yourself because it is very, very easy to use, even if you've never used it before. And we do have a help desk that's available 11 hours a day, Monday through Friday. You can reach them by phone, by email. We also have a chat feature in our portal. So if you click on the star support at the bottom of the screen, it'll pop up a chat feature. It's going to start out automated with our chatbot named Alexa. She can answer about 60% of your questions. But if she can't answer your question, there's always an option to connect to a live agent. But Alexa is online 24/7 all the time. So if you're uploading a file at 3 a.m. on a Saturday, you can chat with her. She can probably answer your question. One common question that we get a lot is, are we going to call on your closed customers that you close with Orion and try to refi them? The answer to that is no. We have a slogan, your clients are yours for eternity. And we take that one step farther. So we monitor your borrower's credit after closing. And if at any time a mortgage company pulls their credit, you're going to get an email like what you see on your screen within 24 hours to let you know that, because they probably are shopping for a refi. So that's a great opportunity for you to reach out to them and see if you can refi them. If you bring them back to Orion again, then we will waive our lender fee, which is typically $9.95 on most loans. So that gives you $1,000 head start over anybody else that they're talking to. Of course, you never want to refi somebody with any lender within 6 months because you're in that compensation recapture period. But after that, it's fair game. We also do you a huge service, and you're going to love this. We'll go through your pipeline every 6 months and send you an Excel spreadsheet with the loans that you've closed with us, with where we think the property value is, where we think the credit score is, what rate they closed at, and highlight any refi opportunities for you. So we are really trying to support you guys and help you grow. Our turn times are fast. We like to keep them that way. When you're in our portal, if you click on current turn times, it's going to pop up what our turn times are. But spoiler alert, we are pretty much 1 day for everything. So 1 day setup, 1 day underwriting, 1 day conditions, 1 day CDs, 1 day closing. So we know you guys like to move quickly, and we try to do that too. So we are here to the main event. I know you guys want to hear about the down payment assistance and our DSCR. So we're going to jump into the down payment assistance now. I'm going to go through a lot of information, and I think I will cover most of your questions. But at the end of the down payment assistance at the end of this portion of the call, I'll stop and see if you guys have any questions. Everyone is muted, but you can definitely use the chat, and I'm keeping an eye on the chat as well. So the down payment assistance programs that Orion offers is going to be down payment assistance in the form of a second mortgage. So what that means is, for example, let's say you're doing a 96.5% regular FHA purchase, and we're doing a 3.5% down payment assistance program. That 3.5% down payment assistance is going to be held as a second mortgage, and that puts your CLTV at 100%. A rule of thumb before we dive too deep into down payment assistance, the down payment assistance is going to obviously pay the down payment for the borrower. And typically you can choose, if you choose the highest rate that we offer on the down payment assistance rates, it will usually cover most of or all of your broker compensation. But what it's not going to cover, what's not going to be covered are their typical closing costs and prepaids. So that is what you have to remember about down payment assistance, that the down payment is covered. Your comp can usually be covered if you choose a high enough rate. What's not covered is closing costs and prepaids. Somebody has to pay those at the closing table. It can, of course, be the borrower. It can be seller contributions. And yes, we are still seeing contracts come in with seller contributions. It can be an eligible gift, or it can be a combination of some of those. Here is what a lot of loan officers don't want to do DPA, and I think that is a huge missed opportunity. And here is what I like about down payment assistance. Obviously, it helps borrowers who need it. Real estate agents are looking for this product, so it definitely gives you an opportunity to secure some new real estate referral sources. But what's cool about it for you guys as loan officers is, yes, you're going to take a lower comp, and we'll talk about what the compensation is, but you're going to get paid on that loan on the purchase now. But because the rates are higher, this is a slam dunk opportunity for you guys to refi them and make your full comp or your normal comp on the refi later. So let's say you make 2 points on the loan now. You close them at 4.75, which is a typical rate that we see on FHA down payment assistance. They're of course going to want to refi as soon as possible. HUD requires that if you have a junior lien on the loan, which down payment assistance is considered a junior lien, that you wait at least 12 months before you refi them. So a lot of my brokers are closing them, waiting 12 months and refining them. So if you made 2 points on the initial purchase, let's say you make 2.5 on the refi 12 months later, you have now made 4.5 points off of one borrower in 12 months. So I would not view down payment assistance as taking a cut in your comp. I would view it as an opportunity to actually help borrowers while you yourself making more money, which is pretty cool. What's different about down payment assistance with Orion? We are fully delegated with our DPA program partners. So we do not have to send these off for underwriting prior to closing. That makes us a lot faster. So we can definitely close these down payment assistance loans inside 30 days, just like any other purchase. We have options for FHA, USDA, and conventional. Our technology is awesome. It's going to structure the down payment assistance for you. So you can pull in your Fannie Mae 3.4 as just a regular FHA loan. And then as soon as you select the down payment assistance program as the loan purpose, it's going to override put in that second mortgage and correct your CLTV. We do all of the disclosures for you on both the first and the second. So they're going to have 2 initial disclosure packages, 2 LEs, 2 CDs, 2 closing packages, but we do all of that for you on DPA. And as a matter of fact, we don't let you disclose on down payment assistance. So we definitely have you covered there. You're only going to have one loan number in our portal, so it makes it easier for you to manage. And our down payment assistance programs do not restrict first-time home buyers either. As you saw, we have tons of marketing materials for you as well. So, and that's a great question I see in the chat is, why would you need down payment assistance with USDA? And that's actually, I'm going to show you that. That would be, you could use the down payment assistance to cover closing costs and prepaids with USDA. So they can finance 100% with USDA and then use the assistance for closing costs and prepaids. So we're going to look at that as well. But for FHA, we have several different options, but I'm going to show you my 2 favorite, and these are the 2 that we see most often. That's the National Homebuyer Fund and the Chenoa Fund down payment assistance soft second. The minimum score for National Homebuyer Fund is 620. Can go down to 600 with Chenoa. But a common question I get is, how do I know which one is best for where? The Chenoa is typically, it prices better and works better for the lower scores, the 600 to 659, or if it's a manual underwrite, that's where you would probably want to go Chenoa. National Homebuyer Fund prices really well and works beautifully with 660 plus, and you do need a DU approval. The down payment assistance amount from National Homebuyer Fund is 3.5, but it typically does have at least some lender credit, which we'll look at. Chenoa has 3.5 or even has a 5% option, but the 5% option probably won't have lender credit. So it's kind of a trade-off there. They both work very nicely though. The one cool part about National Homebuyer Fund is you can make up to 2 points. Chenoa caps you at 1.5. The compensation is going to be on your first mortgage. You're not going to make comp on the second, and it has to be borrower paid. It cannot be lender paid comp. The similarity between the 2 is the down payment assistance second mortgage has a 0% interest rate and no monthly payments due. So they're going to be making a payment on the first mortgage each month and not the second mortgage with both of these products. One difference is that Chenoa is technically forgivable. So if they do the 3.5% down payment assistance, that's forgivable after 36 months with no 30-day lates on the first mortgage. The second mortgage would actually be forgivable. If they do the 5% DPA, it has a longer forgiveness term of actually 10 years with no 60-day lates. I can tell you this, that even though it has the forgivable option, most of my loan officers specializing in DPA are not leaving them in those higher rates, because like I said, a lot of these are closing at 4.75. They're not leaving them in there long enough to be forgivable, because I am seeing a lot of these come back in as a refi after 12 months. And it would be a rate and term refi. It could not be a streamline because you have that second mortgage. Or of course, if there's enough equity, you could do cash out, but we're usually seeing these come back as rate and term. And the National Homebuyer Fund is not forgivable. So as soon as they go to refi the mortgage or sell the home, then that down payment assistance is due back at the closing table, but they have not been accruing any interest, which is nice. Like I mentioned, Chenoa will allow a manual underwrite. National Homebuyer Fund needs an approve eligible. National Homebuyer Fund has no max DTI, it's just per the DU. So if you can go over 50% if you have a DU approval. Chenoa has some restrictions up to 50% on those lower scores, even 55 with some compensating factors. If it's 660 and up with Chenoa, it's just per the DU. One thing I like about Chenoa is they do actually let you do a 2-unit. So your borrower can purchase a duplex with down payment assistance, live in one side, and actually get some rental income on the other side, which is really cool. You can do non-occupying co-borrowers on both of these programs. And sometimes you're going to need if they're under a 640 score, they would need a home buyer education course with Chenoa. It's online, it's 1 hour, it's free for Chenoa. For National Homebuyer Fund, they would need a HUD approved counseling course, and there would be a small fee. I checked it yesterday. There was an option that was available for $35 and online, so not too bad. And then the income limit. So one common misconception about down payment assistance is it's only for low income borrowers, and that is not the case. So our down payment assistance programs go up pretty high on the income caps. I will send you guys this link. Just shoot me an email if you need it, but if you're not sure how to check the income limits. But basically, you're going to click on this button. This is a HUD site that that shows you the county limits for all of the counties. So on this example, I selected Georgia and Fulton County, and you can ignore everything on this side of the screen. We don't care how many people are in the house. The only number that you're going to look at is this number under family median income. It does vary by county. So some counties may be lower than this. A lot of counties are going to be higher than this. So I tried to pick one kind of in the middle. But for National Homebuyer Fund, they allow up to 160% of this family median income. And that only applies to the borrower on our loan. As I mentioned, we're not looking at other people in the household. So we're applying that family median income times 160% to our borrower only, and only to their qualifying income. So if they're getting alimony or bonus, but we're not using it to qualify, we don't have to count it in the income caps. It's the qualifying income for our borrowers only. So for National Homebuyer Fund, they allow up to 160%, which would be 137,600 in this example. Chenoa, with their soft second program that's very popular that we looked at, that program allows up to 115%. So in this example, that would be 99,000. Most of your borrowers seeking down payment assistance will be within those limits, but let's say that they make $500,000 a year and they need down payment assistance. Chenoa does have an option to do a repayable down payment assistance with no income limit. So your borrower can make $1 million a year and still get down payment assistance through Chenoa. It would just be a repayable second. What that means is they would have a payment on the first, and they would have a payment to pay back that down payment assistance second. So they would be making 2 payments each month. They would have a choice of either a 30-year term on that second mortgage with a 5% rate, or a 10-year term on the second with a 0% rate. Again, that's only if they're over the income caps. That's when that second would be repayable. So as I mentioned, down payment assistance rates are going to be higher. Usually borrowers are not concerned about that. They're very happy to be able to get into a home. And as mentioned, you can turn around and refi them 12 months later and pay off that first and second and get them into a lower rate with traditional financing. This is a pricing example. It's not from today. The rates weren't out today when I did this presentation, but this is typically what you're going to see, something similar to this. So I priced this one as a Chenoa, because remember, Chenoa is better from 600 scores to under 660, or a manual underwrite. So in this example, I went ahead and went worst case scenario and did a 600 score. So make sure that you select the Chenoa Fund Soft Second as the loan purpose, not a regular purchase when you're trying to price down payment assistance. And as you can see, our system will automatically set up that second mortgage for you. A lot of these are coming in at the highest rate on the rate sheet, which is 4.75. Remember, these are borrower paid comp. So your compensation is not already included in the pricing that you see. So in this example, 4.75 has a credit of 1.75. Your comp is capped at 1.5 with Chenoa borrower paid. So the lender credit will cover your 1.5 comp and then have just a little bit left over. But as we mentioned, so in this scenario, the down payment is covered by Chenoa. The lender credit can be enough to cover your borrower paid comp, but what's not covered is your normal closing costs and prepaids, and that can be covered by borrower funds, a gift, or seller contributions. And then, as I mentioned, 660 and up with an approved eligible, I would instead look at National Homebuyer Fund. It tends to have just a little bit more credit at the same rate. And National Homebuyer Fund allows you to make 2 points. So in this scenario, you could do 4.75. It would cover your 2 points and have just a tiny bit left over to contribute to closing costs and prepaids. You don't have to charge 2 points. So if you want to do National Homebuyer Fund and charge, 1 point, 1.5, you're more than welcome to do that. As mentioned, the National Homebuyer Fund also has USDA. So USDA, it offers 100% financing, but you could use the 3.5% assistance from National Homebuyer Fund to cover the closing costs and prepaids. And in a lot of these transactions, the borrower doesn't have to come to the table with anything, and you don't need seller contributions. So that's really the reason that you would look at down payment assistance for USDA. It's not really down payment assistance, it's more like closing cost assistance. We also offer down payment assistance for conventional loans. The major difference from FHA to conventional is that all of the conventional down payment assistance is repayable. So they're going to have a payment on the first, a payment on the second. The second is going to be a 10-year term with a rate that is higher than the first. So if the rate on the first is 4%, the rate on the second in that scenario would be 6%. And they would pay that back over a 10-year period on the second mortgage. The nice part about conventional, though, is that there's no overlays. So the guidelines that you see on your screen are actually Fannie Mae guidelines. So if you're doing a home ready first, home ready caps you at 80% of the area median income, but they do not require that they be a first-time home buyer. There's a trade-off when you do a regular conventional loan on the first. They would have to be a first-time home buyer because Chenoa doesn't require this, but Fannie Mae does. So Fannie says if your CLTV is over 95%, which it would be with a down payment assistance loan, then they have to be a first-time home buyer if you're doing a traditional Fannie Mae first mortgage, but there would not be an income limit in that scenario. So they're kind of the opposite there. One more thing, if you go conventional, even though there's that second mortgage that would have a payment, if they have a higher score, let's say they're 720 and up, I would still look at conventional versus FHA because the MI is going to be a lot lower with conventional financing versus FHA. So even though they do have a payment on the second mortgage, when you factor in that the rate's going to be lower than FHA and the MI is going to be lower, it typically does still work out better to go conventional on those higher scores. I would say 720 and up. I would still look at conventional. This pricing example is Home Ready. As I mentioned, this is not today's pricing. But in this scenario, you could do a 5% Home Ready down payment assistance program from Chenoa. The first mortgage could go up to 97% with Home Ready. You have 5% in assistance. So how that assistance would be split up is you would have 3% for the down payment, and then the leftover 2% could go towards your closing costs and prepaids. And in this case, that leftover 2% could cover your 1.5% compensation, since there's not a lender credit here. So this is an awesome program. And for the higher scores, I would absolutely look at conventional down payment assistance, even though it's repayable. One cool thing is that Orion does full underwrites prior to contract, and we do offer that on down payment assistance. So if you're just getting your feet wet with down payment assistance, you want to go ahead and get some approvals in before the borrower goes under contract, go ahead and submit them to us. You're going to keep that same loan number all the way through closing, so you don't have to resubmit it once they go under contract. You're going to keep going with that same loan number. We don't have to send any disclosures out until after contract, because RESPA says you don't have a complete app without the property address. So no disclosures will go out until after you upload a contract, and then we'll send them for you at that time. If you do have a question before you submit a loan, don't forget we have our scenarios desk that will give you feedback within a couple of hours to let you know, hey, yes, this one has a shot, go ahead and submit it as a TBD, or nope, we're not meeting this guideline. So you can get some quick feedback from our scenarios desk without submitting it. And I see the question, is the price the difference that the borrower would have to pay for that rate? So let me go back to that screen. So the price, yes. So the price shown here is the points translated into dollars. So all that our system's doing for you is it's taking that discount point, and based on the loan amount that I entered, which was the loan amount in this scenario would be $291. It's just translating that points into dollars. And by the way, if you don't know how to do that, go to my YouTube channel, watch my video on borrower paid versus lender paid comp, and it will show you how to translate points into dollars based on the loan amount. But since this scenario had discount points, slight discount here, but that's okay because we're doing 5% assistance from Chenoa. 3% would be used for the 3% down payment, and then the leftover 2 would be used to pay your 1.5 comp, and then just a little bit left over towards closing costs and prepaid. So those still work out nicely, even though there is a slight discount. That was a great question. And if anybody else can think of any questions on down payment assistance, type them into the chat. If you have a very specific scenario on a specific borrower, just give me a buzz after our webinar, or send it to our scenarios desk at scenarios@orionlending.com. And I see the question in the chat. I will look up who your account executive is and get that to you. Actually, shoot me an email so that I have your contact information. So email me at the email address eharden@orionlending.com, and I can look up your AE for you and get that over to you. And yep, and that's the video, the broker compensation LP. Yep, that's the one that you said in the chat. That's the video that I was referencing. It's about 10 minutes long, but it will make you an expert on borrower paid versus lender paid comp, and how you translate points into dollars. And again, my email address is eharden. It's right there on your screen, but it's EHARDEN @orionlending.com. And if there's no questions right now, if you think of a question, go ahead and put it in the chat. We'll come back to it. I do want to jump into our DSCR. This is a really, really popular product right now. This is no income doc for investor occupancies. You're probably seeing a lot of marketing come out because there's a ton of these loans coming in our door right now. DSCR stands for debt service coverage ratio, but I'm going to explain what that means. The beauty of this program is there's no personal income docs. So you have no employment, no income on the 1003, no W-2s, no tax returns, no pay stubs. We don't calculate DTI, and you don't run DU. So as you can imagine, our underwriters love these loans. They've been telling us, get us more DSCR in here. We love these. How we're qualifying these, because it's not based on DTI, how we're qualifying these is you're looking at the rental income potential on the property and comparing it to the borrower's payment, their PITI on the property. And that A, by the way, stands for association fees and principal, interest, taxes, and insurance and association. That's what we're looking at. We even have, we do these on purchase, rate and term, cash out. And like I mentioned, these are fast, easy loans. You do need an appraisal. So I would order those quickly in the process, but you're not going to have a lot of conditions on these. These are very, very easy loans. So the main part, the main piece that the underwriters are going to be looking at to qualify them is comparing the rent per the rent comp schedule on the appraisal. So if you have a single family investor, when you go in to order the appraisal, you're just going to select conventional as the type. You're not really doing a conventional loan, but when you order the appraisal in the portal, put conventional. And if it's single family, you're going to order a regular 1007 investor appraisal like you would for a conventional loan. And what we're going to do is compare the rent on the rent comp schedule to our monthly payment. So in this example, you would take the rent divided by our payment, and that gives you what is called the DSCR ratio. So in this example, that's 1.25. It's backwards from what you may think. The lower the ratio is actually the higher risk. So if you're under 1 on the ratio, that actually means the payment on the property, on the mortgage, is more than the rental income. If you're under 1, you're not going to see that a lot, because usually the whole purpose of an investor buying an investment property is to make money. So you're not going to see that a lot, but we do those. So I'll show you the matrix. We do go under 1. But here's a refi example. So what's different in a refi is we're also looking at the lease. So you're going to take the lower of the rent shown on the rent comp schedule on the appraisal, or the lease agreement, whichever is lower. We don't need a lease on a purchase, but we do need to see the lease in most cases on a refi. There is one exception that I'll show you. So in this scenario, we're going to take the lower of the lease or the rent on the rent comp schedule, which is 1,400, divide that by the PITI of 1,600. And in this scenario, we're under 1 because the payment is actually more than the lease agreement, how much they're paying in rent per the lease agreement. And we do those. So this is a snippet from our matrix. So if your DSCR is over 1, that means the rental income is at least what the payment is, then these are the caps. If you're under 1, meaning that they are the rent is actually less than what the payment is, then these are going to be the LTV caps here. We go all the way down to a 660. Our minimum loan amount is 100,000. We go all the way up to 2 million on these. And what's cool about Orion's product is if you're under 770, we need no reserves. If you're over if you're under 70% LTV, there's no reserve required as long as you're under 1.5 million. And then if you're over 70 LTV, then there's a 6 months reserve requirement, but that is for our subject property only. They can own up to 15 other finance properties, and we don't need reserves on those. We're only asking for reserves on ours. And I see the question, do you look at any other debts in the DTI or just the rental income. The beauty of this program, is we're not calculating DTI. We're not looking at other liabilities. We're not looking at income. So no income, no other liabilities, no debt to income is calculated, no DU. That's really the beauty of this product. What we're doing is we're comparing the rental income potential on the property versus the payment. And that's how we're calculating these. I mentioned that if it's a refi, then we need to see the lease. There may be some situations where they don't have a lease that they can show you. Maybe they're renovating the property or something like that. If that's the case and we can't see a lease to calculate the ratio, we have a no ratio product as well. That one is capped at 70% LTV. But most of the time you're going to fit in this top box, and we go all the way up to 85% LTV on a purchase, which is pretty much unheard of in the industry right now. That's the highest LTV that I've ever seen out there on the market. So we're definitely putting forth the best possible, strongest DSCR product on the market. Just a couple of features that I like to point out. We do have an interest only product. We have a 40-year interest only, and we're even going to be releasing ARMs soon, which is pretty cool. Okay, I see a question in the chat. What is the max LTV 2 to 4 unit? So this is these go up to 4 unit. So that's actually what we're looking at now. So there's 1, 2, 3, and 4 unit. We won't go over a 4 unit. So these are the LTVs that you're seeing on your screen. And we also have these matrices available on our website as well. And so some other cool features that we have, like I mentioned, we go all the way up to 2 million. We can do delayed financing on these. And what that is, if you haven't heard of that before, that's when somebody purchases a home in cash without a mortgage. And then after closing, they want to turn around and recoup those fees and put a mortgage on the property. We do those. So they don't have to have the 6 months seasoning requirements to do those. If you do that with us as delayed financing, and we actually don't treat that as a cash out with DSCR, we would do that as a rate and term. We would consider it a rate and term. So the higher LTV caps would apply. We're going to be dropping to 620. So right now we're at a 660. They just let us know yesterday that 620 is going to be coming soon. We allow first-time investors, but not first-time home buyers. So this cannot be their first mortgage ever. But it can definitely be their first investment property. A lot of these borrowers are self-employed. So we allow them to close in an LLC, which is a really popular option that, oh, by the way, the question on the 2 to 4 units. So those do apply. These parameters shown here are 1 to 2 unit. And I did just see that 3 to 4 units is capped at 75% LTV. So these are 1 to 2 units, and then it would cap out at 75 if it's a 3 to 4 unit. So just wanted to clarify that real quick in the chat. Let's see if there's any other questions coming in. So another cool thing about these is you can use gift funds for both down payment and reserves. And yes, you heard that right. That's usually you cannot use gift funds on an investment occupancy, but we do allow that on DSCR, and it can cover all of the down payment, which is pretty cool. A lot of these borrowers are self-employed. You can use business funds for both the reserves and the down payment. And if they're doing cash out, then we can use the cash out proceeds at the closing table to meet any reserve requirements in the program. As mentioned, we do single family 2 to 4 units. We even do non-warrantable condos. If you get a non-warrantable condo, please feel free to shoot me over the condo questionnaire before you submit it, and I'll run it by our condo desk to make sure it's eligible. And we do allow short-term rentals. So if they're renting it out as an Airbnb, VRBO, that's eligible. And we also allow transferred appraisals as well with our DSCR. And so the prepayment penalty, most of your DSCR programs with lenders will have a prepayment penalty. And what that means is if they're going to choose either a 1, 2, or 3-year prepayment penalty. And if they pay off the mortgage, either refi or sell the property and pay off the mortgage within that period, a prepayment penalty would be due. I'm going to show you how to calculate that. But really the big difference between 1, 2, and 3 is the pricing. So our 3-year prepayment penalty has no pricing hit. Our 2-year has a 0.5 point hit, and our 1-year has a 1 point hit to the pricing, which our quick pricer will calculate that for you. There's certain states that don't allow a prepayment penalty. So those are going to be priced as the same as we would a 1-year prepayment penalty with the 1 point hit, except there won't be a prepayment penalty since some states, their laws don't allow a prepayment penalty. So how the penalty amount is calculated if they were to pay off the mortgage early, you would take the loan amount times 80% or 0.8 times the rate divided by 2. By the way, if you can't remember that or don't want to write that down, I have a prepayment penalty calculator spreadsheet that you just punch in the numbers that calculates for you. Email me and I'll shoot that over to you if you want it. But a quick example would be if we have a $300,000 loan amount and the rate closed at 4.5% and they pay it off early, then the penalty that would be due, and by the way, this penalty would be due whether it's a 1, 2, or 3-year prepayment penalty. If they pay it off early, this is what it's due. You take the loan amount times 80% or 0.8 times the rate. When you convert a rate into a percentage into decimals, you just move the decimal twice. So this 4.5 rate would be 0.045. Divide that by 2. In this example, it's 5,400. It looks the formula and calculation looks harder than it is. If you email me, I'll shoot you over the little Excel spreadsheet calculator so you can just punch in the loan amount and the rate. It'll spit out the penalty for you. I was able to go and screenshot this pricing before our call. So rates are not out yet for today. So this would be yesterday's rates on DSCR, subject to change at any time, of course. But this is a real pricing example from our quick pricer. Our rates are awesome. You will usually see rates well into the 5s and 6s with other lenders. We are really dominating the market on DSCR rates. What I priced out here was an 80% purchase. And I did borrower paid comp. You can take these lender paid comp. Just be careful because let's say your comp is 2.75. In this example, there wouldn't be a rate that would cover all of that comp. So it would be at a discount. DSCR lets you go up to 5% in points and fees. So you just have to make sure that your comp plus the discount, if you're going lender paid, plus any other points and fees doesn't total over 5%, but these are not subject to the 3% QM calculation, which is awesome. But you can see our pricing caps out at 5%, paying back 2 points. Once you go over 5, there's no additional credit. So very, very strong pricing. And yes, I see in the chat, it's 5% total points and fees. So when I see these come in, I think the highest that you're going to be able to get away with is still your 2.75 comp, because once you add in the other points and fees, these are still subject to that 5% test, even though they're not subject to the 3% QM, they're still subject to 5%. So you may be able to charge 3 points in compensation and still pass, but I don't think you're going to be able to go up a lot higher than that on these and in the loans that I've seen come in so far. And I see a question in the chat. If the property does not have a current lease, can we do a rent analysis? If you're doing a purchase, we do not need to see the lease. If you're doing a refi, we would have to take the lower the rent on the rent comp schedule or the lease. So if you don't have a lease available, then we would instead need to put that into our no ratio program. And here, I'll go back to that real quick. It would go here in our no ratio program if you're doing a refi and you do not have a lease, and the max LTV on that would be 70%. And that's a great question. Okay, let me skip back over to the pricing here. So as you can see, very competitive pricing. If you don't have us added into Loan Sifter, if you're using Loan Sifter, email me. My email address is at the bottom of the screen here. And I will send you instructions on how to get us added into your Loan Sifter. And if you have any questions on DSCR, any specific scenarios, please send them to scenarios@orionlending.com, or you can email or call me with those as well. We're really trying to get a lot of these in. We've positioned ourselves to be very, very strong on guidelines, very fast on turn times. We're 1 day, and very strong rates. So we definitely want to help you with all of your DSCR loans. And I see the question, what if you have a lease in place for a purchase better than the 1007? So if we are not, we wouldn't, I do not think that we would consider that. Let me check I'm going to check with an underwriter on that for you, but I still think we're going to be comparing yeah, you know, now that I think about that out loud, we won't be able to do that, because even with a refi, we're taking the lesser of the rent comp schedule on the purchase or the lease. So I don't think that there's a way to use the lease if it's higher, but just for good measure, I'm going to check with an underwriter. Send me an email so I have your contact information, and I'll definitely get back with you on that question. And then I see another question, lease versus market rent. If it's a purchase and there's a lease where the tenant won't be vacating, would we still be able to use the market rent if it's higher? So again, we're not going to have that lease in our file, because on a purchase, we are not asking for a lease. So if it is a purchase, we're just going to look at the rent comp schedule per the appraisal versus our PITI. We are not asking for a lease on a purchase. So that would not come into play on that scenario. That's a great question though. So if you guys think of any more questions on DSCR, please feel free to put them in the chat. And I do want to show you just a couple very quickly. We're not going to go into detail on these, but I just kind of want to breeze through some of the other products that Orion has. We have 6 different jumbo programs, all the way down to a 660 score. We even go up to pretty much 90% cash out. If you go over 80% on a jumbo, there's still no MI. So up to 90% with no mortgage insurance, loan amounts up to $3 million. And we have programs that will allow a non-occupant co-borrower, transferred appraisals, and first-time home buyers. This pricing, this pricing was not from this morning. It was from a couple of days ago. It should be fairly similar. It may have changed a little bit, but since we have so many options for jumbo, if you get a jumbo loan in and you're not sure which one it fits best into, just call me and we can look at pricing on a couple of different ones. Our jumbo AUS tends to price better at the higher price points, like if you're looking at if you want more lender credit and a higher rate, typically jumbo AUS is going to be best. If you want a lower rate and don't need lender credit, then typically our Titan AUS or Titan Prime Jumbo would price out very nicely. But if you get a scenario in, call me. We'll jump into the quick pricer and price it a few different ways. Our bread and butter, 7 out of every 10 loans that we get in our door is going to be FHA, VA, USDA, conventional. And we do these very, very well. So we go down all the way down to a 580 with no overlays for FHA other than that 580 score requirement. We can do a non-owner occupied streamline for FHA, meaning they purchased the FHA loan owner occupied and then later moved and they're renting it out now. We can streamline that as an investment occupancy, which is pretty cool because HUD allows that. We have no max DTI. If it's approved eligible and it's not a manual underwrite, we do manufactured homes, double wide or larger. And of course, we're following that new student loan guideline per Fannie. Basically what that guideline is, by the way, is what it says is if the payment is 0, so if it's deferred, if they're in an income-based repayment plan that's $0 a month, then you use 0.5%. If the payment is not 0, let's say they're in an income-based repayment plan that's $20 a month, we can use that as long as that payment plan is going to be in effect 12 months from our closing, which is awesome. So prior to the HUD guideline changes, you could not use an income-based repayment plan for FHA. You could only do that for conventional, but FHA does allow that now as long as the payment is not $0 a month. We are also great at manuals. We do manuals with no overlays other than our minimum score requirement. So you can go all the way up to 50% DTI if you have some comp factors per the HUD guidelines. What you do always want to watch on a manual, because it's a HUD guideline, and this is usually the one that catches you up on a manual, is they cannot have any installment lates at all in the last 12 months. They can have 2 times 30 the year before that, but they need to be squeaky clean as far as installment in the last 12 months. Revolving lates are allowed. It's so credit card lates would be okay, a couple of those, but not installment. And of course, no new collections or charge-offs in the last 12 months. Medical would be the exception to that. And HUD requires 1 month reserves for 1 to 2 units and 3 months reserves if it's a 3 to 4 unit property on a manual. We're doing condo spot approvals. So those came back. If you have a condo and it's not FHA approved, reach out to me. I can give you the instructions on that. But basically we need the HUD 9991 form. And if you don't have that HUD form, Google it. It'll pop right up. That's the condo questionnaire that HUD wants on a spot approval. You can request the case number in our system, attach that form, and we will send it over to HUD. We typically hear back in 3 to 4 business days from HUD off. They'll either tell us, hey, it looks like we're good, here's what we'll need, or nope, this one's not eligible per the condo questionnaire, and here's why. Also, we're doing of course, the new 2022 FHA loan limits. This is based on the case number. So you'll have a drop down in our system where you'll select which one. So if the case number was assigned in 2021, you'll select that. If it's going to be a new case number, then you can do 2022. Those are live in the portal. And this pricing is from this morning. I took this screenshot before our call. Our government pricing is awesome. This is borrower paid pricing. So the only difference between borrower paid pricing to lender paid pricing is the exact amount of your comp. So if your comp is 2%, then you're just going to reduce the credit shown here by 2% if you're converting it to lender paid pricing. Again, I do have a video here on my YouTube channel if you want some additional instructions on that. But we have a nice little sweet spot at 2.99. A lot of borrowers want to be in the 2s. So we added a 2.99 to our rate sheet, and rates are really, really strong. VA, same deal, very, very clean guidelines, down to 580 with no overlays, loan amounts all the way up to $2.5 million on a VA loan, non-owner occupied streamlines, no max DTI per AUS approval. Technically, VA does not have a max DTI cap on a manual either. They just require that if it's a manual and the DTI is over 41, that you meet their residual income calculation. But technically, there's not a max DTI on a manual for VA. We just need some strong comp factors if you're going up above 50. Also for VA, you don't want to see any derogatory, any credit glitches in the last 12 months, except maybe like one revolving 1 times 30 might be allowed on a credit card, but definitely no installment lates. One cool thing about Orion that this is not typically allowed with other lenders is if you guys were paying attention on your NMLS test, you probably got that question that said, what is the maximum unallowable fees that can be charged on a VA loan? It's 1%. Borrower paid comp actually goes into that 1% calculation. But Orion has a workaround. So the workaround is if you're taking a VA loan, borrower paid comp, if and only if the final credit on the lock will cover every penny of your borrower paid comp, we will not include borrower paid comp in that 1% unallowable fee cap. And if you've ever been caught up on that with a lender, then you know exactly what I'm talking about, because most other lenders will tell you you cannot charge over 1% borrower paid comp on VA. So for example, let's say that you're doing a streamline and you need to give them a low rate to meet the net tangible benefit requirements for reducing their rate. And you only want to charge 1.5 borrower paid comp. Then in this example, the 2.625 has a final credit that's over 1.5. So in this example, you could charge that, and we would not include that 1.5 borrower paid comp in the 1% unallowable fee cap. So that's pretty cool. And this screenshot I took from this morning on VA. So this is real pricing, 100% VA purchase. And we have some pretty nice rates here. This 3.25 is paying about 3.25 back. By the way, if you're not signed up with us yet, for the first 30 days, we'll give you an additional 0.15 on rates. So as a new broker, your rates would actually be a little better than what you see here. USDA, we go all the way down to 620 with no overlays, no max DTI. If you have a GUS approval, we do manufactured housing, double wide or larger, and manual underwrites per RD guidelines. So what they're requiring is clean credit for the last 12 months on a manual, DTI up to 2941 if it's a manual, and USDA requires a letter of explanation for all credit glitches on a manual underwrite. If you want us to sponsor you so that you can run GUS prior to submitting, let me know, and I can send you the link, but it's also on our website. You can fill out that little info piece, and the level 1 ID, that would be your USDA login. A lot of times it's your email address. That's what we're asking you for there, is your USDA login. So you have to set that up first. If you don't have a USDA login yet, do that first and then request this on our site, and we'll sponsor you so you can run GUS prior to submitting. This is a screenshot from this morning, 100% USDA loan. And you can see the pricing credits, pretty awesome. So we've got some great rates here. And I see in the chat, VA doesn't allow purchase of an investment property. That is correct. So it can't, for a purchase, it would need to be owner occupied. Where you can do investor for VA would be the non-owner occupied, that I can't say streamline. So if they purchased the property with VA financing, they moved and now they're renting it out and they want to do an IRL, then you could do that as an investment. That's kind of the exception to the rule. And no, we don't charge anything to sponsor you for USDA. So if you want us to sponsor you so you can run GUS, there's no additional charge for that. And people usually think, what can she possibly tell me on conventional that I don't already know? I promise you there will be something on here that you may not be aware of that we do on conventional. Of course, we allow the appraisal waivers because we have no overlays on conventional. We'll do 1-year tax returns if you get that in your DU or LP. No max DTI with an AUS approval. We'll do a no score if there's another borrower on the loan. So one borrower can have no score if the other borrower has a score, and you of course need a DU or LP approval always with conventional. And we do the Home Ready, Home Possible, which has reduced mortgage insurance. We saw our in-house down payment assistance. This product you may not have heard of, so I do want to stop and tell you a little bit about this. Fannie rolled out a couple of months ago a program called Fannie Refi Now. It allows up to 65% on the debt to income. So who they rolled this program out for is borrowers who want to lower their payment with a rate and term refi that otherwise would not qualify because of their DTI. So it has to be a conventional rate and term only. You can go up to 97%. It must be a Fannie Mae owned mortgage now for at least 12 months, seasoned at least 12 months. There's a link, by the way, that you can check that. If you don't know if their mortgage is owned by Fannie Mae, shoot me an email. I'll send you the link where you can look that up. It's the same income caps as Home Ready, so 80% of the area median income. Most of these refi now are getting an appraisal waiver, but if it doesn't, then Fannie will give us $500 to credit back the borrower at closing. We'll give them a $500 additional credit, which will pay them back for a large chunk of their appraisal. Here's the part that you probably have heard a little bit about, but don't know what people are talking about. So conventional now will allow blended FICOs. And what that means is you can have one borrower on the loan that has a score under 620. They can actually have like a 450 score, as long as the other borrower has a score over 620. And when you take the average of the two, you're averaging out to at least a 620. Quick example, if you have a borrower with a 580 score and the second borrower has a 780 score, that obviously averages to 680, which is over 620. And as long as you get a DU approval, you can do that. So Fannie's only allowing a score under 620 on conventional as if there's two or more borrowers. You have to get a DU approval, which these are approving in DU. We have gotten some of these in, and you're still going to base the pricing off the lower mid-score borrower. And you may be asking yourself, well, if they have a 580, that's going to be terrible pricing. It's not. So I actually just took this screenshot this morning from our pricing engine, and I priced a conventional 580. And you can see this is borrower paid comp. But there are some doable rates in here. So it's not out of the question. So if you need that lower score borrower on a conventional loan for income or DTI purposes, these are doable loans now. And then I also priced one with a higher 700 score so that you can see the difference. So our conventional pricing is very strong. We have 3.625 paying back over 2.25, which is nice. And I see in the chat, so the no max DTI means that if you get a DU approval at 55, then you're fine. Yes. So we have no max DTI per Fannie Mae guidelines. Just make sure that if you are over 80% and that you can get MI. So if that's the piece, if you know all conventional loans over 80%, they need MI. So you just want to run that quote through like any MI provider, MGIC, Radian, somebody, and make sure that we'll be able to obtain MI on the loan, but no overlays on the DTI. And if you have any questions on our products, this is my contact information. Again, you can always email our scenarios desk. My email address, eharden@orionlending.com. We give lots of awards out. So quarterly, we have a ton of different awards. I would love to see some of you guys get one of these awards so you can put it on your social media, put it on your website and brag. We'll send you an email and attach these nice little badges. Quickest closing. I think our quickest closing that we had recently was like 4 days from submission to close. Of course, it already had a transferred appraisal, which we accept for most of our products. But I'd love to see you guys get some of those awards. If you're not signed up with us, then email me, eharden@orionlending.com. I'll send you a broker application. You have two choices. You can, of course, go ahead and do our full broker app, all standard stuff in there, nothing crazy. But if you have a loan you want to submit like right now, then we have an express app that is just a form. It's not even the full application. It's a form that tells us who you are, your W-9, your lender paid comp selection, no credit pull. We'll go ahead and get you credentials right away, usually within 2 business hours. And then you can give us the actual broker application later prior to your first closing. And I want to pause to see if you guys had any questions that you haven't asked in the chat yet. If you have any specific questions on a specific borrower, email that credit and DU and whatever your question is over to me or the scenarios desk. But if you have any general product questions, I do want to pause and see if there's anything I can answer for you guys. And I know I went a little bit over. I was trying to keep this to an hour, so I appreciate you guys hanging in and bearing with me on that. And I'm looking at the chat. I don't see any questions coming in yet. Oh, do we have any true walkthroughs on getting a loan through Orion? Absolutely. So we actually host, our training team hosts a walkthrough example. So if you're looking for an example, then what you'll want to do is go to our website under the tutorials and training and schedule a STAR portal walkthrough. So they will take you through a demo upload and submit of a loan. And so that you can watch the process. Our portal is amazing. It's super easy. Honestly, though, I don't think that most people need that because our portal is so intuitive. I think that most people would be able to follow the prompts. And if you get stuck, we have our help email, phone number, chat. If you actually have your loan that you're ready to submit, an actual live loan, what I would recommend is go ahead and click on upload a loan at the top of our portal, pull in the 3.4. And just if you get stuck, reach out to your account executive or our STAR support desk. And that's a great question. So do we need 1 or 2 loans for down payment assistance? With us, you are just going to have 1 loan number in our portal. I know with some other lenders, they make you have 2. With us, you're just going to have one loan number on the first mortgage to work in our portal, just conditions on 1. We do have a second loan number behind the scenes that we're handling for you, but we don't need anything from you on that. That's something we're handling on our side. These are great questions. Does anybody else have any other questions you can think of? And yes, for FHA, we do allow manual underwrites per HUD guidelines. So you just want to make sure there's no installment lates in the past 12 months, 1 month reserves if it's 1 to 2 units, and that your DTI meets HUD guidelines. HUD does allow up to 40 on the front, 50 on the back with 2 comp factors. You can go up to 3143 with a manual with no comp factors, and then 3747 with 1 comp factor, and all the way up to 4050 with 2 comp factors with a manual. And those are just HUD guidelines. We don't have overlays on manuals other than our minimum score of 580. Any other questions? And if you don't feel comfortable asking a question in the chat, please call me after we end the call here, or email me, or email the scenarios desk, and we would be happy to answer any questions that you have. Well, I don't see any other questions going through, so awesome webinar. Thank you. I appreciate you guys. I know this was a long webinar, so I appreciate you guys taking the time with me. And I will go ahead and wrap up the call, but I truly appreciate you guys. Reach out to us. We're all here to support you. And if I don't talk to you, you guys have a wonderful rest of your day. Thanks, guys.